Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now, Ukraine tensions continue to put pressure on equity markets, with US equities taking another dip lower despite a day of relative calm across Asia earlier in the market day. Now, today, two observations in particular stood out to us. Near-term fears of further escalation are beginning to contrast a little bit with a rising number of reports coming across my desk that remind us how pullbacks of the current type can feel painful in the short term, but unless they lead to a broad-based recession, pullbacks have been temporary, and 6 to 12 month returns from these levels have tended to be historically quite generous. Now, this fits in with our preferred route of using hedges like gold and the yen to ride out any further drawdowns. Have a listen to a podcast from earlier this week if you want to hear more about these two assets. Now, while much of the focus has been on weaker equities, we'd also recall that Russia is one of the top commodity producers in several areas like oil, palladium, platinum, and gold. Now, while Western sanctions have directly impacted these industries so far, we'd keep a watch here as another potential channel of short-term stress into financial markets. Now, beyond the Ukraine headlines, which I'm sure we'll see much more of in the coming days, there are three other areas I wanted to also focus on today. First, in New Zealand, New Zealand's Reserve Bank raised interest rates. Now, I always find interesting when the Reserve Bank of New Zealand takes any policy actions, given it was the first central bank to formally adopt inflation targeting as we know it today, all the way back in February 1990. The central bank raised its policy rate yesterday, of course, by 25 basis points to 1%, while noting it had seriously considered a 50 basis point rate hike. It also plans to wind down its asset purchase program, but the main surprise, though, was that the central bank raised its projected policy rate peak to 3.35%, much higher than its earlier projection of 2.6%. Now, financial markets now expect the policy rate to rise to 2.5% by the end of this year, all, of course, positive for the New Zealand dollar, which remains one of our preferred currencies on a 6 to 12 month horizon, alongside other commodity majors, of course, like the Aussie and the Canadian dollar. Today's actions, of course, supports our view of further gains ahead, especially if the USD has peaked. Now, second, I also want to talk about Singapore, where headline CPI inflation, the core inflation number rose to 2.4%. The report did attribute the rise in inflation to higher electricity and gas prices, higher rents, and a slower pace of decline in retail prices as supply chain pressures persisted. The inflation data, of course, adds to a series of key economic data releases in Singapore in recent days, including the expansionary budget and a positive non-oil exports number, which we, of course, separately find interesting as a positive signal for regional and global growth. The inflation number, though, could be one of the more significant ones for financial markets because if it triggers any rise in expectations of more policy tightening by monetary authorities, that could, of course, feed through to more support for the Singapore dollar, which is one of our preferred Asian currencies. And finally, Hong Kong, of course, released an expansionary budget as well. Growth was clearly a strong theme, as evidenced by the expected deficit and consumption vouchers, for example. But while the budget might be significant from a domestic growth perspective, for financial markets, we continue to believe the focus should be on broader Chinese fiscal and monetary efforts to stabilize growth. So 3 other key events beyond the Ukraine headlines. Before I end, just a reminder that Steve is back on Friday with the Through the Noise podcast, where, of course, we always try to put the recent events into a slightly broader and longer term perspective. But have a watch out for that. And as a reminder, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.